Hi friends, this is C. Ashwini Rastogi. Now UAE is levying corporate tax from 1st June 2023 onwards. Any financial began after thereafter. So what is that? What is the UAE corporate tax? Let us understand why the UAE came out with this corporate tax. In the development of UAE corporate tax regime, the Ministry of Finance of UAE has been guided by the set of internationally accepted principles to ensure efficiency, fairness, transparency, predictability in the design and execution of proposed UAE corporate tax regime. Basically, they want transparency and preventing of harmful tax practices. So, as per the BAP's recommendation, every country has to prevent from tax harmful tax practices. So, corporate tax regime is based on international best practices to strengthen the UAE position as a leading global hub for business and investment and accelerate the UAE development and transformation to achieve its strategic objective. Introducing corporate tax regime is mainly for the purpose of international standard for tax transparency and preventing harmful tax regime. So what is that? When corporate tax is applicable? Suppose your financial year began from uh, 1st up July to June. Your financial year is after July to June. So in your case, corporate tax is applicable from 1st July 23 immediately after thereafter. But if your financial year is January to December, then your corporate tax is applicable from the 1st July January 24. Same way, April to March, April 24. So this is the whole scenario for applicability of corporate tax. So what is the tax rate? As the UAE came out with 9% levy of corporate tax rate, they have issued public consultant document in the January 2022 itself for making representation from the public. They have public has to give a comment by May 22 after implementing public comment document. They have come out with the decree law. Decree law recently uh, published by the UAE government. The decree law issued in the month of October 22 that says 0% on the portion of taxable income not exceeding a specified limit. This 3,75,000 dirham is mentioned in the uh, public consultation document. So 9% levy is over and above. So basically, corporate tax now going to law introduced from 1st June 2022 onwards financial year, 9% is levy. Basic limit is 3,75,000 dirham. So in respect of free zone is already enjoying 40-year, 50-year tax holiday period. So their qualifying income is tax free. In the corporate tax regime, their corporate tax is although 0%, but in case they have not qualifying income, in that case 9% levy is there without any exemption. So they defined article. There are 67 article in the decree law. Article 11 says taxable person. Same way in the income tax sector in India defined person, accrued income in section 9, total income in section 5. Same pattern the decree law is there. So taxable person, uh, they have defined natural person, you and me, like that person, legal person, domestic company incorporated in the UAE, foreign company having presence through the P in the UAE. So basically, we will discuss this natural person and legal person in detail. Exempt person, government entity, although other person is not important for our discussion in this presentation. So suppose you are a natural person earning employment income that is not taxable. But if you are interest income, that is also not taxable. Dividend, rent, capital gain, that is not taxable. But your business income, that is state source earned in the UAE, that is liable to tax. So this business income, even though you are a natural person, liable for 9% levy in the UAE. So your employment income, dividend income, investment income is out of the purview of from this corporate tax levy. So if individual conduct business or business activity, then it is liable to tax as specified in Article 11.6. So as a natural person, you can do business through the sole establishment or proprietorship or unincorporated partnership. In the UAE, this unincorporated partnership is treated as tax transparent entity. So whatever income earned by the unincorporated partnership is taxed in the hand of partner. So the unincorporated partnership will not tax any in their own hand, but their individual proprietorship income will be taxed naturally. So let us say a case study to understand this in better ways. Your UAE business income is 5 lakh, so there is no exemption. Entire 5 lakh is taxed. Your employment from UAE income is exempt because employment is not taxed. Employment from UK, since you are a resident of UAE, is also not taxed, that is exempt. Interest income not taxed, only business income is taxed. So your total taxable income is 5 lakh. On that basis, basic exemption is 3 lakh 75,000. 1 lakh 25,000 is taxable. So 9% on 1 lakh 25,000, 11,250. It's your UAE tax liability. This 11,200 dirham you have to pay in the UAE. So what happens? Suppose if you become the resident of India or resident some other overseas country. So this 11,250 will become the foreign tax credit. You can get it in this example. India UAE CT allow you this foreign tax credit as per the article. So this is the whole system is going to happen. So they define business. Business is something, any kind of activity conducted regularly on ongoing independent basis by person and in any location, such as industrial, commercial, etc., related to use tangible or intangible property. This is the business defined. So they are going to tax only business income, not your employment or some passive income. Same way, business activity is also defined, that is also covered for taxability. They have come out with the permanent establishment definition, a place or other form of presence in the state, UAE, in accordance with the Article 14 of this decree law. It's called P. Suppose you have ICO and your presence in UAE through the P, this P is liable to tax in UAE. So foreign permanent establishment is UAE company having a presence in outside India, outside UAE. So UAE have a presence in India or UAE have a presence in China. That is called permanent establishment, foreign permanent establishment. So a place of business or other form of presence outside the state, outside the UAE, that is determined in this according this Article 14. So in P, they only covered fixed place of P dependent agent. The activity threshold will be trigger a P for a foreign company in the UAE will be determined that only following two tests. They have not covered virtual P or other form of P. So let us understand legal person. Legal person can be domestic company or a foreign company. So domestic company incorporated in the UAE and foreign company having a presence through P. So those are earning UAE source income that is liable to tax. Domestic company also liable to tax. So in this example, I covered what is the deeming function. Same as place of effective management. When you have a place of effective management, board decision, residence of director, a particular country, major strategic decision is taken through that particular country, and you become the deemed resident of particular that country. Same way, I have taken this foreign company presence in UAE, right? Your UAE shareholder is 60% and UK shareholder 40%. You have a India foreign presence in India. You have a foreign company through UAE, but all the directors are seated permanent resident of the UAE. Director majority board meeting held in the UAE. So important decision making are held in the UAE. So this Indian foreign company become the deemed resident of EU. So tax transparent entity I have discussed. Transparent entity can be in the form of limited partnership, general partnership, unincorporated joint venture, or unincorporated association of person, some trust. If that is unlimited liability, their tax in their partner only. In this example, we have a UAE partnership entity in which 60% share held by the UAE partner, 40% held by the Indian partner. So this 10 lakh profit is distributed amongst the partners, 6 lakh, 4 lakh ratio, and 6 lakh will be taxed in the hand of the partner, and 4 lakh will be taxed in the hand of the Indian partner. So what would be the case if none of the partner has unlimited liability? That means this is the limited partnership. It not treated as unlimited unincorporated partnership. So in that scenario, 10 lakh from the taxable income of this UAE partnership. So as I discussed, your UAE source income going to tax in the UAE, uh, this is called Article 45. Article 45 is says withholding tax rate, there would be zero tax rate. So this zero tax rate is also the subject to tax. This is called in public consultation document 8.7. So Article 45 presently levy 0% withholding tax rate. Whatever you earn income in the UAE, UAE source income, UAE would not deduct any withholding tax rate since it is a 0%. So UAE source income can be attributed in the form of P or in if income is derived from activity contract perform UAE, asset located in the UAE, right use for economic purpose. So mainly earning UAE source income, not trigger corporate tax. So this is the illustrative example given in the Article 13 of state source income. That is, state source income can be uh, derived by the resident, or you as an Indian person or a overseas resident person, you derive income from the resident person of UAE, or where it is derived from non-resident, receive, has paid or accrued in connection with attributable to the P. So where it is otherwise accrued or derived from the activity performed, asset liquidated, capital invested, right use. So this UAE source income would be taxed in the UAE. So what is the corporate tax? A resident person, which is judicial person, is subject to corporate tax on its taxable income derived from state or from outside state in accordance with the provision of this decree. So you are a resident person of UAE, your entire world income will be taxable in the UAE. In case taxable income of resident person, which is natural person, you and me, in the income derived from a state or outside the state insofar as relate to business activity conducted by person natural estate 11.6 as I discussed is still regarded as tax. Non-resident is also subject to tax in the UAE, whether they are entity in the form of P, the income attributed to that P, or state source that is not attributable to the P, having a presence through the nexus, market nexus in the UAE, that is also taxed as per the Article 20. So what we have covered: legal person, natural person, foreign company. So since you are an UAE incorporated entity, your entire worldwide income will be taxable in the UAE. Even though you are a natural person doing business or business activity in the UAE, your commercial activity will be taxed subject to you are earning business income as given the Article 11.6. Even though you are a foreign company managed through the permanent establishment, you are effectively manage or control business through the UAE, your entire world income would be taxed in the UAE. So where income earned from abroad is not exempt, income tax paid in the foreign jurisdiction can be taken as credit against the CT payable in the UAE. So whatever your liability is 9% in respect of UAE corporate tax. Suppose you pay some foreign taxes, you can take foreign tax credit against the offset the tax liability in the UAE. As I discussed, limited, general partnership, unincorporated joint venture, association will be treated as tax transparent entity. So that tax they are not liable to tax in their own hand, but income will be flow through and will be taxed in the hand of the partner. So flow through treatment is widely recognized and internationally accepted, and also ensure tax neutrality investor in collective fund offset limited partnership. So this is the concept adopted by the partnership. So exempt income, I have discussed your dividend received from resident in UAE. Your domestic dividend is not taxed; it is exempt. Even your foreign dividend is also exempt if it is earned through the participation interest. I will discuss this participation interest in detail. Any other income or from participation interest, such as capital gain, may also be exempt as per the Article 23. So income of foreign uh, permanent establishment. Suppose UAE company have a presence in India, that is called foreign permanent establishment that meet the criteria of Article 24 says that since the UAE levy 9%, but India levy 30%, that is more than 9%. So your foreign permanent establishment in India not liable to tax again in UAE. So income derived by non-resident from operating aircraft or ships also tax free. So this is the participation exemption that is called if you are already holding or intention to hold more than 5% in a particular company, and your holding period is at least 12 months. Suppose you are a company having a stake in particular some subsidiary or some other associate company more than 5%. So whatever profit you derive from that participation company will not again tax, since that participation is already being taxed more than 9% in particular their jurisdiction or foreign jurisdiction. So your capital gain from such participation dividend will not again tax in the UAE. So this is the main crux of the participation interest. The participation interest in the form of beneficiary ownership is also defined in the OECD Model Tax Convention, UN Model Tax Convention, that says your capital gain would not be taxed if and your dividend as per the Article 11 royalty fee for technical services would not be taxed if you are have a beneficial ownership. Beneficial ownership in what OECD models convention says 25%. So they allow lower tax rate. So same way participation interest concept is adopted in the UAE corporate tax. They want to give exemption if you are already paying such kind of taxes. So your dividend income, capital gain, not again tax in the UAE. So what I have discussed, all your domestic dividend earned from UAE company, including dividend paid by the free zone person that benefit from 0% is exempt, right? Dividend paid by the foreign companies is if you are earning uh, dividend from foreign company, we are giving exemption, even though exemption if you have a holding uh, participation interest 5%, subject to your foreign subsidiary is subject to tax at least 9% in their jurisdiction. So your foreign dividend is also exempt. Same, your capital gain is also exempt if free zone company must hold 5% of shares and subject to tax 9% in UAE. Let us discuss this example. So you are a free zone person, right? You have a stake a company in mainland, right? This mainland is tax 9%. So whatever you sold this shares and earned capital gain, so capital gain is tax free in this free zone person. Same way, if this company mainland company declare a dividend, this dividend is also exempt. This article says. So hope so, guys. You understand this pretty topic and what should be taxed and what should not be taxed, and your business income going to tax from uh, financial year began from the 1st June 23. Your income first would be taxed in the financial year beginning, so not after that.